All right, so let's get into Bitcoin today. This is going to be a good show for you. Breaking down whether or not Bitcoin is going to continue its slide down and what does that mean for the markets? What does that mean for altcoins? We'll break it all down for you guys. It's going to be good. My name is Paul Barron. Welcome back into Tech Path. All right, before we get started, thank our sponsor, and that is iTrust Capital. If you guys are looking at long-term holding, make sure and jump over to iTrust Capital's website. You can do a lot there. You can buy, sell crypto. You can also go into gold and silver with your IRA, so it's very easy. And if you're into altcoins, you can also jump into altcoins. All of that self-directed in your own IRA, so make sure and check it out. Maybe this is a good thing for your tax season. Consult your CPA, check it out. This might be the way to go. Make sure and use our link down below. Get a $100 funding reward if you guys decide to jump in. All right, so first thing I want to get to is a tweet here by Kobe Easy. Letter Bitcoin, of course, officially down 20% from its post-ETF approval highs. This is erasing over 200 billion in value. So that's a big number, guys. This is less than 2 weeks. Bitcoin price is now down over 10 grand to their lowest since December 4th. So dropped largely due to the underwhelming performance of the Bitcoin ETFs, but primarily this is about GBTC and not necessarily the other ETFs. So I'll explain how all this kind of plays into this. Other things that you want to look at, this came in from Jeff Seyffert. If you don't know who that is, one of the Bloomberg analysts on ETFs on the Wall Street. And, he kind of mentions it's a bad day for Bitcoin ETF overall in the Kentucky Derby, the Cointucky Derby. GBTC saw 640 million outflow today. And outflows aren't necessarily slowing. They're actually picking up. So this is not a good thing for GBTC. We don't have the numbers on BlackRock data just yet, but the point being is we're probably seeing some inflows going into the traditional, I won't call them traditional, but the new boys on the block in terms of ETFs versus what's happening here with GBTC. When you look at GBTC and you consider their fees, and this is something that has been referenced quite a bit on the Main Street, Wall Street channels out there, talking with Michael from GBTC about why the rates were so high. Because remember, he's at 1.5, where most everyone else is below 0.3 in terms of their transaction rate. So that, I think, has been a big killer here for GBTC. And if you look at the number here, that is kind of this point of no return, it's this window right here around 500,000 right now. So around actually 450,000 Bitcoin. So when they hit the 450 mark, this is potentially when they're going to pivot on their fees. Now, the question will be, is this going to be too late at that time? Will we see a lot of the outflow kind of flowing in or out, I should say? When you look at the GBTC discount to NAV, when it goes to zero, I think we'll see the biggest day of outflows. I do agree with that. And when you look at the Y chart, this kind of shows it right here. This is getting eerily close to that point where a premium is going to be now paid, meaning they're going to pay you to sell your Bitcoin. So that is not going to be good for Grayscale in terms of transfer. Now, the question is, how much of that exit is actually going into these other ETFs? Or are we actually seeing Bitcoiners selling Bitcoin? Very interesting position, I think, right now. And if you look at Eric Balchunas, he kind of says it the same. 10%, this is 10% of the replies he's sending out to everybody. So I'll address it to everybody here. Even with GBTC ETFs, still net buyers of 1 billion since dumping began. So still a lot of people buying. So it would be worse without them if we didn't have these ETFs in place. So you need to look at the crypto brethren because the cultures, because the call is coming from inside the house. That means that Bitcoiners are maybe for the first time causing a bit of a market dip here. So I don't know, guys. Laser eyes are looking kind of eerie right now. Marty Party comes in and says, hey, we got some more bad news. As expected, Grayscale moves 18,000 Bitcoin to Coinbase. This is the 8th day in a row that we've continued to see this. So remember, we know very little on how they've been very transparent, even though they were aware that we can see the blockchain and it's public. So now the beauty is there. It's right in front and center about what's happening in the marketplace. And my question to you is, do you think Grayscale makes it through this exodus? Do they just become a small percentage of the Bitcoin holdings? And with the acceleration both in BlackRock and Fidelity, are they the new Bitcoin holder titans? Has this been a grand plan all along from Wall Street? Drop some comments down below. Smash the like button right now. Take some time. hit that like button. This will help others start to understand and learn more about what's happening in crypto and really start to get a framework around, is this a buy event? Is this a potential buy the dip opportunity? Let me know what you guys think. Bitcoin now riding a new 600 million in GBTC offload with the price eyeing a 2-month low. Not necessarily a great opportunity if you're looking at maybe an entry, but if you haven't been in Bitcoin before, maybe this is the time where you actually do it. A couple of points I want to focus on here. They deposited, this was the look on chain note, which is the Grayscale depositing in 15,000 Bitcoin, again, 10 minutes ago. So this is coming out quickly. Very interesting right now. How are you guys playing this? Are you looking at Bitcoin as a hold through position, or are you looking at maybe trying to exit some of this with profitability and jettison into some of these alts that have been bleeding against Bitcoin? Is that your strategy? Let me know. I'd love to kind of get an insight from what you guys are doing. Other things I want to talk about. This is Fidelity's executive, Timmer. He's foreseeing a continued churn around Bitcoin. He hits on a few points here within the article. The value path now intertwined with the fate of these ETFs has become a tightrope walk between immediate reactions and long-term potential. I don't know if it's a tightrope, but it definitely has a lot of bearing onto the overall market position. This also gets into something that I've kind of had a theory on, is that Bitcoin would see a pump, get a little bit of retraction, and then get very anti-volatile, meaning a lot more stability. I don't know if that is necessarily going to happen. It depends on who's holding the biggest bag at the end of the day, if it's BlackRock, Fidelity, someone like that. Timmer also suggests that the recent dip in Goldman Sachs Bitcoin-sensitive equities index is more of a market recalibration than a red flag. Do agree with that. Other things he's talking about, he called out weak hands on the market. This goes back to my point. This is the Bitcoiners going out arguing that they're not buying enough to counter the dip. That is a bit surprising, because that tells me that we don't have a lot of new Bitcoiners coming in to be able to get this. So there you go. And then, of course, this is Adam Back. He's hitting it. Don't blame the ETFs. 9 new ETFs are, a big buy the dip opportunity. But this goes back to kind of the idea of how a lot of Bitcoiners, do kind of control the narrative on Bitcoin in terms of buy and sell. So it's another one that you have to keep an eye on for sure. Further into this, I want to go to this headline. JP Morgan downgraded Coinbase. This is another one that's also getting hit, underweighted now following the spot Bitcoin ETF underperformance. And you look at a couple of points they hit on. I disagree with most of this, but there's a few things that they're talking about. They think the catalyst of the ETFs, they just push the ecosystem out of its winter. This is going to disappoint a lot of market participants that are coming into Bitcoin maybe now for short term. I don't know that anybody coming into an ETF is looking at short term, but maybe new people might be, but I doubt that is going to be happening. If they need that kind of exposure, they're probably going to do it directly on an exchange. Prices already under pressure, Bitcoin falling below 40. Remember, that's before 40. Remember where Bitcoin was this time last year, 16.5. Just saying. Just remember that. So the other thing, the investment bank had previously categorized Coinbase as a neutral rating, but predicted that the price target of 80 by December 2024, which it did not hit. So sometimes these predictions are a little bit off considering Coinbase. We'll look at the chart here in a second. We think much of the crypto industry has set a high bar for the ETF launches, and while meaningful, we think expectations are simply too high, unrealistic. That's a possibility, because remember, going into last year, everybody was still leaning in that we were going to get 5 rate cuts this year. And I think everybody got over their New Year's party and realized they drank too much champagne, and that 5 rate cuts is probably not going to be the case. Likelihood is we may not even see one for March. If we don't see one for March, is May the next window for a rate cut? And if a rate cut were to hit right around halving time, would that have some magic maybe in the marketplace? Possibly. Could see a lot of things happening there. Here, of course, is a little bit further, another tweet here from GR Dector. Just in, stocks have big drops in missing earnings. There are a few that are missing earnings, but it's mostly mid caps. World's largest conglomerates now are 3 mil down, about 12%. Largest home builder down also. These are anticipated to a certain extent. Remember, though, that in the S&P 500, I think I have it up here on the chart. Yeah, here's the S&P 500. This thing has hit its all-time high. I've got this out on the daily, stringing this out. But the last time we saw this was back in December of 2021 in that range right there. And now if you look at where we are right now, let me kind of zoom in on this for you guys right here. This is what we're looking at, this little weak zone right here that has started to really push the S&P 500 up. This might be a potential for a bit of a reversal here. Still a little bit new to know for sure of what that might look like. Cycles are one of the things that you do look at in crypto because it does have some eerie similarities. But at the same time, I'm going to say this, that cycles may get disrupted a bit with the activity now coming from Wall Street. So I do want to play a clip here from Ben Cowan, and he talks a little bit more about cycles. Listen to what he had to say.
What is it about mid-January that sort of brings this on? And it's kind of interesting because if you go back and look at all prior cases of January, February of the halving year, Bitcoin has had weakness, right? It has fallen back into the bull market support band. Last cycle, you can see that we did that, right? We fell back to the bull market support band in Q1 of the halving year. And yes, we went a lot further below it because we had pandemic, recession, and the Fed printed a lot of money. But even the cycle before that, again, you can see there was weakness. Q1 of the halving year with Bitcoin, and it fell back to the bull market support band. Now it held support. And what's interesting is you go back another cycle, and sure enough, right? Sure enough, like every single time, mid-January starts to show some weakness, falls back to the bull market support band, right? So if we were to fall back into that bull market support band, between like 36, 37K. If it happens a couple of weeks from now, it could be 38K. That's where the bulls are gonna want to try to show up and see if they can hold the line.
So I think that will be a big question because whether they hold the line on Bitcoin, the other one that's starting to move in a downward direction, at least when you look at trend lines, has been Ethereum. Ethereum also sliding, so down to under 2,300 now. And I think a lot of people are looking at this. Is this still trading in line with Bitcoin? If you look at the charts, I want to just jump over to the ETH chart real quick. And you can kind of see some of these order blocks that are, by the way, I'm on the LuxAlgo price action concepts, which is what you're seeing right now in terms of a trading indice. But this is one that I watch a lot because we are now breaking through that order block at 2176. So this is a very critical point as we film this for Ethereum. And then if you look at sentiment, just to give an example here, also what we had seen where Ethereum was flying fairly high when it was hitting the 2,400 mark, one of the highest registries it was back on the 17th. And then we saw that immediate starting to drop over the past week. And this big fall off right here on sentiment, this is our market sentiment index. Again, also in line with what's happening right here on the regular charts within ETH. So it's something to keep an eye on in terms of market sentiment. Still a lot of downward pressure. Right now, it does look like we're going to continue to see more bleed in Ethereum and in Bitcoin going forward. All right, just as another point here, this is, of course, coming in. The SEC received a request to do some approve interest-bearing stablecoins. Stablecoin markets have been pretty active, and you'll be surprised. I'll show you a chart here in a second. But the point is that this is kind of where the market is going. Whether or not we get regulatory alignment here, I think is the key. If we do get a regulatory alignment, which still could happen in the first part of this year, that's another big catalyst that could be a narrative that will push Bitcoin and other crypto assets, up based on a potential passage of a stablecoin bill in the House. So be on the lookout for that. We're going to keep our eyes to the ground and ears to the ground and eyes in DC, checking that out to make sure as things start to develop. If you look at just the history here, I thought this was an interesting chart. As it's playing through, let me kind of examine or blow this up for you guys. As it's playing through, you'll notice that, you got Tron, ETH, USDC kind of flowing. This is 2022. I'll skip through to, here we go, 2023, flowing along, no problem. And then here toward the end of 23 and into 24, bam, you end up with Solana taking the lead on daily stablecoin volume. That's a pretty big deal considering what's been happening in the Solana ecosystem. So monthly transfer volume now on stablecoins, let me zoom in on that for you guys a little bit. On USDC on Solana surpassing 300 billion, hitting an all-time high. So still big in the Solana ecosystem, which is still one of the tokens we watch very closely. We do like it, yes, of course. So all you saw, we don't shill Solana, we just like the project. There's many projects that we like, by the way, and that's just one of them. So back to the charts real quick, just to take a look at Solana. Also sliding down right there, had that order block right here in that under 100 range. But where it's trading is very interesting. If you look at this loss where it is right now, setting it around $81, and it's very sticky at that $80 point. But I feel like we've got a potential in this little order block zone right here in the 70 to 68 range. I don't know if we'll ever get there, but this is one that we're watching very closely, possibly for another entry. And maybe this is the first time that you've been looking at Solana. Maybe this is one that you want to go research and take a look at. Avalanche is kind of in the same boat. Had a pretty big fall off here from its high. And if you look at this correction, what is that? Almost 40%. So that's another one. Big order block right down here in the $22 range. That may be another zone. So there's a lot right now to look at on Avalanche when you look at the historical. Nothing really to kind of hold this one in place if we continue to see it fall down. So it's currently trading around 28, 29 bucks. So keep an eye on those. And of course, if you're not in our Diamond Circle, make sure and jump into that, because that's another place where we do additional content, more podcasts, all that good stuff. Check it out, because it's going to help you guys kind of get ready for this next run. Remember, right now when the market is bleeding, these are actually the exciting times. I know people doesn't think that. You love to see that up only, but you've got to be able to entry. And getting in at these projects that you do like when these markets are down and getting deflated, these are second chances on these little buy the dip opportunities. So let me know what you're getting. Drop in some comments down below. Catch me out there on X at Paul Barron. We'll catch you next time right here on TechPath.